Morning traders, Paul here with GammaEdge. Today is Tuesday, the 20th of December. Let's get started. Pause your players here, read to the bottom. If you agree, hit your play button. Overall summary, all our market models, whether they're short-term, intermediate term, or long-term, are in cash or are short, and we've had a good run to the downside. Two goalposts, plus GEX, which is the dominant upside call area, has dropped to 4,100. We see this as potentially bullish, short-term bullish. Speculators are moving their calls closer to spot price, and they are taking advantage of any upside movement. They'll play that convexity, that gamma. Downside is 3,800. This is minus GEX. It's unchanged. We consider this the downside line in the sand, and a loss of this into the close would be quite bearish. That would embolden more puts being opened, and when we open puts on the trader side, the dealer response is to sell, so that would put downward pressure on prices. Transitions, we are mixed in context of where we closed. We're below the predominant transitions, although the 0 DTE indicates that perhaps a 3850 zone or above that is in the stars. We don't know if it's going to happen. Again, the structure with all the other transitions are above us. They're wide, they're loose, they're ill-defined, and so this is a stretch, but we are watching that, and we'll be looking to see for a reversal in the CT to confirm a push upward. Delta-Moneyness, which is our view of kind of a time series, a crystal ball, if you will, looking forward, shows that the 38.35 leg is going to be completely absorbed. And what this means is that we're seeing long calls go in, especially as we get below this, and that's going to neutralize to a certain extent those short calls that are there for the end of the month, end of the year, end of the quarter. And right now, though, just note that we are still dominated by short calls, long puts at that strike, and so the overall flow is decisively downward from this contribution. Now, overall, although we think this is important, the JPM leg is important, the air in the room is really being consumed by a large amount of in-the-money puts, and you'll see that in one of the slides here. Day over day, there is downward pressure due to natural charm flows, and what that means effectively is that in the absence of any monetization of the SPX, which is the largest instrument, we get shorter and shorter and shorter on these puts. The dealers get longer, and so to hedge flat, their response is to have a downward selling pressure. Now, this is a second order effect. It's small, but nevertheless, it's present, so just be aware of that. In our market does nothing mode, our bias is slightly downward. In the market monetizes those ITM puts, those in-the-money puts, we look out on the horizon, and we potentially see a reversal from our current levels. We're advocating watch the cumulative tick for the reversal and for that confirmation. So speaking of the cumulative tick, here's the USC. Here's a breadth indicator, and you can see day over day we're getting worse and worse in the 52-week new lows. It continues to outpace the previous day, so this is not favorable to the bulls. But nevertheless, we are mindful that we could potentially reverse this over time, so be aware of that. The cumulative tick has been, filtered cumulative tick has been decisively downward. We look at this as being an indicator of institutional money, and when we see sustained downside movements in this, we know big money's coming off the table. So just be aware of that. Whether it's institution or just big orders, sweep orders, is irrelevant. The fact is we've been selling, and we've been selling pretty decisively, so just be aware of that. That's all evidenced here. The bolded CT line or cumulative tick line here did end nearly flat on the day, but you can see we're railroad track down in the short-term moving averages, and all these moving averages are clearly trending down, which has given the model a downward bias. Now, all that said, we are mindful of a potential reversal from these levels, and that's what we're looking for. So come into the Discord and you can watch this in real time with us. And actually, if you use TradeStation or TOS, we have these tools available for you so you can have it on your own platform. Taking a look at key levels, we've had some shifts in the PM side, the PM-Settled side. I'll let you read that. Over here on the right side, like I said, we've moved down into plus GEX. This is the combo, which is the AM and the PM. We've not had a change here in the 4,000 or 3,800, so unchanged there. Expected move is still a nice moderate 2.3, which is down substantially from where we were last week, of course. In general, just be aware that we're getting a tightening of the ranges, and when we see a tightening of the ranges, we typically break one way or the other. PM-Settled Complex, loose transition zone. You can see where those 42,000 approximate short contracts are sitting. Net, you can see we're down even a little bit more, so there we're starting to see growth here of calls coming in, effectively closing, long calls coming in, closing those short calls. And a reduction in long puts here. So just be aware that we're starting to negate some of the impact that's going on here at 38.35. Now we closed here below this, and that will have a definite change in the overall structure in terms of deltas. But just be aware in the PM complex, which is what this is, we're heavily put dominated all up and down the chains, and that has a huge impact. But the background noise from this is that the net charm is for dealers to sell, so we're going to continue to see downside pressure towards 3,800, and like we said, if we lose 3,800, we could embolden the bears to move even lower. The 0 DTE, this is that range I was talking about in the opening monologue there. You can see we pinned right at another reversal area. We see this all the time. Just pay attention to those. We are mindful of potentially pushing upwards towards this area and maybe even up underneath there. It depends on what happens with the deltas, but you can see the sign changes starting to occur in these areas. That's constructive. We want to see puts closed. Since this is the 0 DTE, all of these puts are coming off and all of these calls are coming off. So the balance today is more puts than calls, and when we see more puts come off day over day over day, it shifts the entire structure to a more call-dominated structure as long as new puts are not added. We are seeing a balance on both sides there, so just be aware that for now our bias remains to the downside. The 1 DTE, fat, loose, very difficult to advance in this. We note for tomorrow, still negative deltas across the board, very large expiry sitting over here. This is the 1 DTE. We are looking at the 3805 area as a possible pin that is above the line in the sand of 3800. Note this is an expiry for tomorrow. This is our crystal ball projection for tomorrow. So just be aware, a lot of puts coming off estimated for tomorrow. If we set right here tonight into the close, that would not surprise us. We'll just have to wait and see where we end up. The SPX combo complex, which is the AM and the PM settled complexes. Here's that 3800 line, very large, very obvious, very clear. All these reds here are the delta structures, all put dominated. The combo complex is fat, it's wide, it's ill-defined. Progress to the north is extremely difficult. Too many to call out, but you can see every place we have a reversal in here is a potential hiding area. Every place gamma flips. Note the deltas don't flip. And so we're not really thinking of an aggressive move to the north here. Taking a look at the Delta-Moneyness structure for the PM-Settled Complex. Over here, this is now the JPM. This was green yesterday, and it was because we were above it and it was in the money. Now it's not. And the fact that it's short is why it's above the surface here, the plane here. Now, if we stay below this thing's just going to get smaller and smaller and smaller because the deltas are going to decrease towards zero. And this will fade into nothingness as we get closer and closer to the end of the month. Now, that being said, this same 10 days out type of approach is sitting right here also on the put side, and you can see this is going to continue to grow. So right here at the boundary, the deltas are going to limit towards -1 because this is the put and these are long. And what this means is that as the trader, gets shorter and shorter and shorter, the dealers are getting longer and longer and longer. And the natural behavior of this compared to this is going to have downside pressure. So we think the Santa Claus rally could be in jeopardy if these puts are not monetized and they just are allowed to expire. Remember, the SPX is cash settled. Now, all of that said, if people start taking these off the table, closing out their accounts, doing whatever they're going to do, well, closing out their positions, I should say, we could see a reversal. And when we close a long put, we're effectively getting longer on our side because we're going from -1 limit on our deltas towards 0. The dealer is going from +1 towards 0. They're getting shorter, and to hedge back to where they were prior to us closing that put, they're going to buy, and that could be the reversal that we've been talking about. So read this context, make sure you understand this. The sequencing is really important here, and this is why you can't really say the market's going to go up, the market's going to go down. It's deterministic on what traders do. And we've been criticized that, we say the market's going to go up and the market's going to go down. Well, guess what? It will. And here's why. Because you don't know what is going to occur. It really is human behavior of fear and greed, and their fear of not getting the profits that they think they're going to get, especially here at the boundary. So pay attention to that. Final chart here, 4100 is the upper goalpost that is down from 42. You can see the magnitudes are very, very close to each other. So it's, it could be feasible if we get any form of rally that people would start jumping on the 4200 line. Who knows? Down here at the 3800 line, you can see that very dominant, almost the same magnitude as yesterday. So this really is a line in the sand, and you can see the structure as people build out down below. The JPM 3835 is sitting right here. Here's that 3870 line. This is a little different from where we were yesterday. So this is a new line that's growing. And most importantly, here's that 4,000 strike. It's actually getting smaller. That's not good. We like to see that getting longer as calls get added. And the fact that we push down, yet this is maintaining, we're coming down, means the call structure is getting weaker. So we are below transition. Your eye can see this very clearly here. We are below transition, sitting right here at 38.17 was our close. We've got a lot of work to do to move up. We've got a lot to get through. Whether it happens is anyone's guess. Again, it's all about sequencing. So that's it for today. If you have any questions or comments, urge everyone to come into GammaEdge.us, click on the pricing tab, fill out the blanks, and 14-day free trial. The tool's turned on. We ask that you follow us on Twitter, GammaEdges with an S, and then here on YouTube. If you like today's content, let me know directly by smashing that like button. It gives me immediate feedback that I'm providing content that you guys can use. And then, of course, subscribe, because Taylor, myself, and Michael post videos, quite a number of videos, and we want to keep you abreast of what we're seeing and how to apply this stuff to your trading. So with that, make it a great Tuesday. Join the Discord, and we'll talk constantly about what we're seeing. Thanks, everyone.